Back in April, when the S&P 500 was around 5,200 and almost every analyst predicted a fall, one individual defied the crowd. This seemed unthinkable at the time. However, Tom Lee boldly projected that the S&P 500 would reach 5,700 by the end of the year. By mid-September, his forecast has come real, and the index is currently trading at about 5,700. Of course, Lee has more to accomplish. He is once again looking ahead, suggesting that the S&P 500 could rise to 6,000 before the year is up, even though many economists are preparing for a recession and warning of a market disaster. The bull market's momentum remains strong, therefore, this is the correct time to take the opportunity. However, choosing the appropriate stocks is more important than ever in a crowded market. That is why we have compiled the best options he has selected to cover his list. So, hang on till the end to uncover the last option. The first element on the list, Palantir Technologies Inc.'s ticker symbol PLTR. Palantir has in recent years surged, surpassing the $40 barrier following a remarkable function. There is more to this narrative, even though some analysts are raising concerns about its valuation and labeling it overextended. This is not the first time Palantir has caused controversy. Palantir has been progressively gaining traction and securing prominent contracts in the federal and commercial sectors. These alliances, such as the $100 million agreement with the U.S. Army and partnerships with APA Corporation and Nebraska Healthcare, demonstrate the practical need for Palantir's state-of-the-art artificial intelligence technologies. Palantir is assisting companies in realizing the full potential of artificial intelligence, AI, with its own technology, such as the Artificial Intelligence Platform, or AIP. Profit margins are improving, and the company's commercial revenue is increasing, paving the way for future expansion. Although the stock may seem overpriced by traditional measures, the same arguments were made about Nvidia prior to the stock's 2,000% increase in value over the previous 5 years. Similar to Nvidia in the early days of AI, Palantir has just begun. With a total addressable market, or TAM, in enterprise software estimated to be $500 billion by 2030, acquiring even a small piece of that may result in massive revenue growth. While the technicals indicate that the stock is destined for a decline, its long-term upside potential remains obvious. If Palantir can increase revenues to $11.5 billion over the next 5 years, while also expanding its operating margins, the stock might reach $100 in the future. The next company on the list is Taiwan Semiconductor Manufacturing Company Limited, TSMC. TSMC has once again proved its supremacy in the semiconductor sector, with impressive Q2 2024 earnings. With revenue up 40% year-on-year to 673.51 billion new Taiwan dollars, the company is benefiting from high demand for its advanced nodes, which include 3nm and 5nm technologies. These advanced technologies now account for more than 67% of the company's overall wafer production revenue, demonstrating TSMC's critical position in the ongoing AI and machine learning investment boom. Notably, the high-performance computing category accounts for more than half of TSMC's entire sales, highlighting the company's central role in driving the AI revolution. In terms of profitability, TSMC continues to excel. The company increased its gross margin to 53.17%, while operating margins rose to 42.55%. Earnings per share, or EPS, increased by roughly 36% year-on-year, indicating strong financial health despite rising demand. Looking ahead, TSMC's leadership appears confident, expecting additional revenue growth of 8 to 12% in the coming quarter, driven by growing demand from key areas such as AI, IoT, and automotive. What distinguishes TSMC is its capacity to handle the growing demand for sophisticated chips, notably AI devices. As AI models get more advanced and require exponentially more computational power, TSMC is experiencing a capacity overload in high-performance computing. The company is already the industry leader in advanced chip nodes with a 90% share and is well-positioned to sustain that position. TSMC is positioned to dominate the market for many years to come. Furthermore, TSMC is benefiting from government aid aimed at localizing semiconductor manufacturing amid global geopolitical uncertainties. With nearly $705 billion in incentives from countries including the United States, Germany, and Japan, TSMC is aggressively extending its global footprint. All indications point to TSMC continuing its ride on the AI supercycle, making it an important stock to monitor as demand for advanced processors grows. Finally, the third stock on our list is Cloudflare Inc., ticker symbol NET. Cloudflare may appear costly at first glance, but the company's quick growth and imaginative thinking make it a must-see stock in the field of technology. Despite significant short-term hurdles, including reduced growth rates and a challenging macroeconomic climate, Cloudflare continues to be an industry leader. With a stable business model and expanding demand for its services, the company has the potential to succeed in the next years as AI and cloud infrastructure investment increases. Cloudflare's financial performance remains sturdy, and the company's presence in the Asia-Pacific area is rapidly expanding thanks to specific go-to-market methods. Cloudflare's customer base is likewise expanding, with more than 210,200 paying customers and 30% of Fortune 500 firms currently using its services. One of the most amazing elements of Cloudflare's future is its AI and edge computing ambitions. The company's Workers platform is experiencing enormous uptake, with active developers jumping by 20% in just a few months. Cloudflare's Worker AI, which enables businesses to run machine learning models on the edge, is also growing in popularity, with a 67% increase in developer usage and a whopping 700% spike in AI inference requests. Cloudflare continues to invest in AI capabilities, updating infrastructure to accommodate quicker and more sophisticated workloads. Its new AI audit tool and SpeedBrain technology are just two examples of the company's inventive pipeline. With speculations of a prospective acquisition of DigitalOcean moving around, Cloudflare may soon expand its cloud computing company. In short, while Cloudflare's stock may not be cheap, its long-term growth potential is clear. For patient investors, this is one company that could provide substantial profits as AI and cloud computing keep on transforming the digital industry. In conclusion, investors are given an exciting opportunity to invest in areas with enormous development potential thanks to Tom Lee's top stock selections. The companies are poised to reach trillion-dollar valuations and make a substantial impact on the future by concentrating on technology, renewable energy, and innovative healthcare. These stocks provide encouraging opportunities for people who desire to invest intelligently and hang on to them for significant gains over time. Now that is the end of this video. What are your thoughts about these stocks? Have you invested in any of these? Leave your thoughts in the comments section below. Let's meet again with our next video.